My name is Donald Green. I am the Executive Director of Mississippi Delta Council for Farm Workers Opportunities Incorporated. Today, we're here to talk to you about a very important form, a very important part of your business operation, that is Schedule F. Okay, before we get started in the detail about the Schedule F, let me explain to you what a Schedule F is. A Schedule F is a profit and loss from your farming operation. If you have a farm and if you are doing farming yourself on your farm, you need to file a Schedule F. It is an important document. It's not only important, but it's a required document to go into your IRS filing 1040 form. The IRS requires it, the State Tax Commission requires it, and the USDA requires it if you apply for loans, grants, and other services that they may have. You have to file that Schedule F in order to become a registered farmer in the state of Mississippi or anywhere in the country. All right, let's start with the details of the Schedule F. The details are, we'll go down through the Schedule F line by line, so you'll feel comfortable with it. Most of the stuff you already know. Most of the items that are presented here are just for you on your individual business. Number one, you have to put on the form your name. That's the first line, your name and your Social Security number. The second line is a box A. Now this one they start to register everything. Your principal crop that you are producing or activity. Sometimes it's grain, vegetables, fruit, animal farming. All of that is important. And it's got a code for each one of those line items. You have to look that up, but principally 120 would be the code for most grain farmers, vegetable growers. Your accounting method is box C. Most of the time it'll be cash. If you are a corporation or larger business, it may be an accrued method. You may have to use an accrued method. And I'm not going to go into details about that. But box D has a place for your employee identification number. For small growers that are family-owned farms, most of the time, your Social Security number will suffice. If you are LLC and have a tax ID number, you may put it there as well. Box E, F, and G start to ask you a few questions about your farm. E says, did you materially participate in the operation of your business? That's going to be yes. Of course, you participated. It asks you that because it's important that they understand you are the principal operator of your farming business. Line L, in this same section, talks about it. The question is, did you make any payments? And that's in this particular year to anybody that requires you to give them a 1099. Now that's important because the IRS says if you pay anybody cash or check $600 or greater, then you need to issue a 1099 to them at the end of the year. That's important. And that's important to you because you'll keep track of everybody you pay over $600. That's important. And usually that's contracted workers like ag pilots, beekeepers, those kind of folks contract with you to get your crop out, get a particular purpose in mind when they come to your farm. They don't work for you. They just come by and spray your crop, or they come by and harvest your crop. They come by and keep your bees, or whatever product or service that you're rendering. That's what they do. There's some specific contract services that they provide. Then you provide them with a 1099 at the end of the year. And then the follow-up question to that is, did you do it? Or do you plan to do it? Okay? So if you say, yeah, I paid somebody over $600 this year, well, did you file a 1099 for them? Or do you plan to do it? That's all a part of the pre-questionnaire about your farming operation. All right? Now, that's the introduction part of this thing. That's the information that you need when you first start to fill out the Schedule F. Now, part one, the income. Part one, farm income, cash method only. 1A says the sale of purchased livestock and other resale items. That means that when you buy items, you buy them, small items, a hog, pigs, or cows or chickens. You buy them at one price and you sell them for another price. So that means that's all the sales that you had, the gross sales. Now you're not talking about after you made. You're talking about the sales that you produced, not the cost net, not the net cost. We're talking about the gross sales. Now it's important that you get that right, because if you put the wrong figure down there, it's going to hurt you in the long run. You have to put the gross sale on there. If you buy a hog for sell a hog for $500, then you put the $500 there. If you sell it for $10,000, you put $10,000 there. Whatever your gross sales were for that particular animal, and those particular animals, you put on line 1A. 1B is how much you paid for those animals. That's the cost or other basis of purchased livestock or other items reported. Now, you don't put the feed and seed down there. You put exactly what you pay for those animals that you bought for resale. Exactly what you pay for those animals you bought for resale. Now, you can lump them together sometimes if you have hogs and chickens. You can do that. If you have hogs and cows, you can lump them together. But you know how much you pay for each group of them, and you put it on line 1B. All right? Now, line 1C is the difference between the two. That's your cost minus your gross sales is your net income. It's already figured that for you. See? All right. Now, line 2 is a little bit different, because it comes again and says sale of livestock, produce, grain, and other products that you raised. The difference is, the first time you buy animal products that you're reselling. The second time it's just animal products that you raise on your own farm. Sometimes when you buy them early on in life, in your farming years, then you become a farmer, and you start growing your own hogs or your own chickens. They start producing their own self. So once you sell them for animals that you have produced on your farm, then they go on line 2. All right, part 1, line 2, sale of livestock, produce, grain, and other product you raised. Okay, that includes vegetable farming, those kind of things. And that's most of the time on line 2, part 1, line 2 is where most of our sales will be reported. Most of our sales in this vegetable growing, small farming operation, produce, vegetables, and livestock, small livestock operations will go right there on that line 2. So that's where your income is. So you can just feel comfortable. Don't be afraid to look at it. Sometimes some of you have an accountant to do your tax return, never pay strict attention to your Schedule F. But that is the good information that's packed there. It tells you a lot about your farm, how well you're doing individually, and how well you've done in the end of the year. So you want to make sure you gather that Schedule F information, give it to your accountant if you don't do it, your tax return yourself, and look at your Schedule F. Don't be afraid of it. Say, look, man, I need to do my Schedule F because I need to see what's going on with it. I need to understand the process, and I need to understand the numbers behind this Schedule F. And you're working every day, so you see what you're doing, but sometimes, for whatever reason, we won't report it as we should, but we need to report it all on the Schedule F. Make sure you don't put it on any other form but a Schedule F, so that lets everybody know that, hey, I'm a farmer. This is what I do. I'm a farmer, and I'm registered. I'm a registered farmer. I filed my Schedule F. I got my farm number, and I'm registered with the USDA. Line 3 is where we are. Cooperative distribution. Sometimes if you're farming and you're operating, your GN give you patronage dividend, you report that right there. In vegetable farming and growing like that, you don't have much of that. You don't have much of that in smaller farms that don't do cotton. That's kind of like advertisement for the gin, advertisement for the processing people that say, well, hey, bring your products to me and let me process them for you. And they give you a patronage dividend. And that's usually not a whole lot, but it's reportable. It's a reportable transaction. You report it right there on line 3A. 4A, agricultural program payments. Now that could be a lot of things. A grant, distribution from USDA for whatever reason. They gave you an agricultural program payment. Maybe you just need a well. They gave you $4,000 to buy a well. Well, you report that right there on line 4A, agricultural program payments. You still need to see an accountant to do your tax return. I want to clear that up. This is this is not an item that I'm telling you to do just for you. Yeah, I'm telling you this is general information that I'm giving you, and you need to still see an accountant to do your tax return at year's end. But I want you to have kind of an understanding of a Schedule F and what goes on there. I want to issue that disclaimer right there. So I'm not your accountant. I just want you to have kind of a general idea of what's on your Schedule F, so you'll feel comfortable talking about it. You'll be able to do it, and you'll no need to try to project why it's important. It's always important that you file it, regardless of your income, how low it is, how high it is, how much expenses you have. All of that is good and fine, but you still have to report it on the Schedule F at the end of the day, regardless of what your income or expenses are. Okay, on line 5 is commodity, credit corporations, loans, repayment reports. Those are just general things that you have to report, and they'll give you a 1099 at the end of the year, so you don't have to worry about trying to keep up with that all the time. They'll issue you a 1099 just as if it's over $600. Crop insurance proceed and disaster relief payment on line 6. Same thing. They'll issue you a 1099 usually at the end of the year, and you put down the amount that you received and then the amount that is taxable to you. All that go on line 6A and 6C. You notice that 6B is the taxable income from it. So that's reportable income. And we'll talk to you a little bit more about these items because they're not directly related to your actual income. They're just supplemental things that happen during the year. Okay? So just keep that in mind. They're not directly related to your income that you earned from your sale of produce of production that you made on your farm. These are supplemental things that happen during the year that you really can't count on happening every year. Sometimes they do, sometimes they don't. So these are just items that happen, okay? Line 7, custom hire. Now that's not for folks that work for you, that's for folks that you work for. If you own a combine and you cut somebody else's beans, or you own whatever equipment you do for someone else, that's income for your farm, but that's not direct income as a production. That's not production income, so keep that in mind. All right, other income that you might have, fuel tax credits, state and local gasoline tax credit, that's just other income. Sometimes you put grants there from other sources, sometimes you put work from other sources. Anything that's cannot be put in anywhere else on the return in this part 1 income section, you put it on line 8. Any income that you haven't put anywhere else on the return, you put it on line 8. After that is over, that you will produce on line 9, you add up all these things, and that's your gross income. That's your gross cash income. It has we're not going to explain to you today about the accrual method. We're using the cash method only because we're talking to small farmers and growers that usually don't always file their Schedule F with their income tax return for whatever reason. We want to encourage you and let you know that it's important to put that Schedule F in. If you can do that, because that makes you a registered farmer with the Internal Revenue Service, that makes you a registered farmer with USDA. And we want to make sure that it's important that you keep track of your income and expenses over the years. And America needs to know how many small farmers we have and how many farmers we have overall. So the government needs to know that. So if you don't file your Schedule F, then there's no way to track that you're a small farmer, that you're a small grower, or find out where you are. Okay? So we want you to make sure you understand that Schedule F is critically important. And when you're working with growers like we do all the time, that Schedule F is the only basis we have to know what their income was and how we can best help them to increase their income. We have to know what it is, okay? All right, that ends the income discussion. So there it is in a nutshell. That's all your income. All right, we talked about income in section part 1. Now let's talk about part 2, farm expenses. Remember now, we talked about out of cash only expenses. We're not talking about the accrual method for larger growers. We're talking about the cash farmers that small growers, disadvantaged growers sometimes, and sometimes just small growers. That's non-corporate growers. All right. So, all right. Now this section comes from line 10 through 32. All right. So we'll go down each line and talk about what's important and why it's there. But remember, filing your Schedule F is always important. That's an annual form. You need to file it every year, and you need to fill it in every year. Pass it on to the Internal Revenue Service, pass it on to USDA, and pass it on to us. Sometimes we need to see how, for the training purposes, we need to know. You know, you always worry about sometimes getting resources. Well, getting resources is after we know how many farmers we have in our district or in our community, in our state. We have to know how many farmers are there before resources can be requested. So remember, that Schedule F is the first line of defense when you talk about how many farmers you got. Make sure you put yours in. You'll be in the farm. You'll be on the farm Schedule F team. Okay. All right. Line 10 in this part 2, and you'll probably see it on the screen. Car and truck expenses. All right. Now, sometimes that's a little bit tricky right there for car and truck expenses, because you can do that by one of two methods. You can file actual expense, or you can file mileage expense. So you talk to your accountant about which method that you want to use on that thing, on that car and truck expenses. Sometimes we use fuel and gas, and sometimes you want to keep track of your fuel and gas that you use for your cars and trucks are separate from the fuel that you use for your tractors, your combines, and your equipment. Okay? So that's what that is. Car and truck expense. That's gas, fuel, oil, repairs. Sometimes can go there and all these other things. All right? That's just general information on car and truck expenses. If you farm, you probably got a truck or some type of vehicle that you use on a day-to-day basis. And so you see, it's easy. It's easy doing the Schedule F. All you got to do is remember how important it is and how it helps you as a small farmer or a small grower to get other resources. And it helps us to determine how much resources are needed in our area. Okay? It helps us to help you. In other words. Thank you. All right, so now number 11 says chemicals. Those are chemicals that you use on your farm, whatever they are. And I won't name any particular chemicals, but I want you to understand that any of those chemicals that you use go right there on line 11. And most of the time they're very expensive, and but whatever they cost, all collectively, you put it right there on line 11. That's all your chemicals. Conservation expenses can go up in cost too. That's for land leveling and those kind of things. And you got to remember now, you got to tie that back to, if you pay somebody for land leveling your farm more than $600, then you got to give them a 1099 at the end of the year. That's just an extra part. I'm throwing that in because that ties back to your questionnaire at the top. Okay, if you pay them more than $600, you get individuals or companies that provide services to you. You have to give them a 1099 at the end of the year. Now, you don't have to necessarily give chemical companies a 1099 because they are required to keep up with their own sales and expense. That's a sale. That's a straight sale. They're required to keep up with their own sales. All right, we went over car and truck expenses. We went over chemicals, and talked a little bit about conservation expenses. But line 13 is custom hire. If you hire someone to cut your soybeans, or hire a company to cut your beans or your vegetables, or pick your peas, or whatever it is that you're producing, if you hire somebody to do that, then they go right there on line 13. It's mostly for machine work, and it doesn't cover hand picking watermelons. It doesn't cover any of that, but always machine work. Agricultural flying services, those kind of things, go right there on line 13. Now, you got to remember, if you pay them more than $600 during the year, then you've got to put it give them a 1099 at the end of the year. All right, got to remember that. We talked about that earlier. That's a question they ask you at the beginning of your Schedule F. And I hope you're feeling a little bit better about what a Schedule F is and what it does for your operation. It helps you to improve your operation, really, because it's a true, accurate picture of your profit and loss from your business. So it will improve your operation if you understand to fill it out every year, and it helps the IRS figure out what you're doing. It also helps USDA understand the needs of farmers and growers in our area. It also helps us as a training organization to help you. So I want you to remember, fill out that Schedule F so we'll know that that's 1,500, 2,000, the total number of farmers in the area that have filed their tax return, including the Schedule F, and that help us to say, hey, to the USDA, to wherever we get our resources from, we need more. And that's more resources to help you. But without having filed a Schedule F, we have no proof that you are a farmer. Okay? All right, let's move on. On line 14 is depreciation expense. Now you can depreciate your tractors, all the equipment that you buy over the life of the equipment. To usually that's 5-10 years, whatever like that on your equipment. And that's something that you talk to your accountant about. You just tell them, hey, I bought some equipment. I bought a tractor. I bought a combine. I bought whatever you bought you can depreciate it. And that means you're amortizing the equipment over a period of time so that you take a little bit of the cost every year, or you take, in some cases, the 179 expense, you write it all off in 1 year. That helps you as well. It helps reduce your taxable income, and it helps you put you in a better position to buy more equipment. All right, and that's why it's allowed. The next thing is line 15, employee benefit programs. Now that's hard to understand because for small farmers and growers, you probably don't have no employees. But if you do, you have a benefit program, a retirement program for them, that will go right there on line 15. Now, sometimes if you're a sub-S corporation or maybe a LLC, and we're not covering all of that right at this moment, we're talking about a family farm, the vegetable growers, small growers. Those are the people we like to encourage to file your Schedule F so that you can be counted. You might not have employees, so I'm just going to skip over that and go on down to line 16. If you have hogs, you got to feed them. So all you feed for your chickens, your hogs, your animals that you're raising for production purposes, go right on line 16. All right? And 17, fertilizer, lime. All right? Now that's a little bit different from your other chemicals. Fertilizer and lime is just items that you use to increase your production. And sometimes, and this is a strange thing sometimes, but fertilizer comes in a powder form, sometimes it comes in a liquid form. And so you got to be careful not to get them confused with other chemicals that you use to kill grass and other insects or things like that. So fertilizer is increase your production. Lime sometimes is used out there as well to increase your production or to dry out your fields for other purposes. But just remember, those are fertilizer and lime. That's a different category than other chemicals on line 11. So that's line 17. Line 18, freight and trucking costs. cost of if you pay somebody to haul your vegetables to the processing plant, if you pay someone to haul them to the next where you purple hull peas to processing plants or to people that you're selling them to directly, that'll be your that'll be your on line 17 freight and trucking. Sometimes you order your products through from different sources, and you have to pay a freight fee if you order large sums of seeds or large sum of animals, chickens or whatever else. They charge you a freight fee. FedEx or any of the other companies, they put that right there on line 18. All right. Now, line 19, gasoline, fuel, oil, etc. That's for your farm equipment. You've already talked about your car and truck expenses on line 10. Down here, the gasoline, fuel, and oil is for your equipment. Your tractors, your combines, your heavy equipment trucks, 18-wheelers that you haul grain with. That fuel go right there on line 19. Fuel, gasoline, fuel, oil, etc. All right, that's insurance is self-explanatory. Crop insurance, disaster insurance, liability insurance, all that goes on line 20. All right, now line 21 simply got the interest that you have to pay for loans that you made with USDA, rural development, banks, or whatever else. They go right on line 21. And sometimes you buy land from an individual and you're paying them back over a period of time. They're charging you a little interest. Then you put that other interest down there on that line. All right. Labor hire, number 20, line 22 is labor. That's for your crop pick. Most of the time, it's high impact labor, labor intensive crops, watermelons, cantaloupes, sometimes peas, but mostly crops that you have to pick with your hand. And that goes right there, labor hire. But you also, if you got tractor drivers and all those other folks that work on a farm or whatever they do, it goes right there under labor. All right. And if you get a credit, you subtract out the credit that you got from employment tax credit and put it right there. Again, just something that you're not concerned about if you don't have a lot of labor on your farm. You're not worried about just a small family farm, and you don't pay anybody to work for you. Like you don't need to have. Don't concern yourself with that. All right. Number 23, pension and profit sharing arrangements. Well, we're trying to get you there from where you are now. Okay, where you become a large grower and have a pension and profit sharing arrangement on your farm. Right now, we want to talk about those farmers that sometimes don't file a Schedule F for whatever reason. They don't feel like they need to file. But I want to reiterate that it's critically important that you put together and file your Schedule F, no matter what size your income is, no what size your expenses are. We need you to put together a Schedule F so you can be counted. You can become a part of the F team, filing your Schedule F. Your F team, all of the farmers and growers across Mississippi, across the country, file it. And the larger you get, you'll realize it's important to file it. But so you got to start. I want you to start right now, filing your Schedule F every year. All right, line 24, rent, lease, vehicles, equipment, or land. Okay. So we want, if you're leasing a truck to haul your grain and produce, you lease your freezer truck that you haul your vegetables with, or if you just lease the land that you use for farming, it goes right on that line. So most of us have land or equipment that we rent if we grow in produce and vegetables and soybeans or cotton or whatever it is. Sometimes you rent the land, and so we want to make sure you put that rent there. And got to remember now, if you pay somebody more than $600 a year, well, at the end of the year, you got to do them a 1099 for your land rent, for your vehicles, whatever else you rent from them. If you rent vehicles from a larger company or corporation, then you don't necessarily have to send them a 1099, but you got to keep accurate records on all of it. But you don't have to send them a 1099. But on the land rent, no matter how big the company is, how large they are. If you pay them over $600, you got to send them a 1099. All right. Now we're going to go on to line 25, repairs and maintenance. That's repairs on your equipment, maintaining your equipment. If you have a shop that you use on a regular basis, or you're renting a shop that you use on a regular basis, you have to repair your air hammers, your jacks, and all these other things. Well, that's the repair cost. Put that right there on line 25, repair and maintenance. All right, line 26, seeds and plants. Now, you have, in order to grow vegetable or produce, you got to have seeds and you got to have plants at the beginning of your production season. Okay? Those expenses go right on line 26. All right? Now, sometimes line 27, storage and warehousing. Well, a lot of times small growers don't do a lot of storage and warehousing. Some of the growers have grain bins to store their products in until the price go up or the price change so they can sell the product. Most of the growers that we have been working with here at Mississippi Dutch Council don't necessarily have that kind of need. But sometimes as you grow and as your production increases, you'll need cold storage. You have to start paying for that. That'll go right there on that particular line, okay? On line 27. Line 28 is other supplies you might need: hand sanitizer, mask, gloves, those kind of things go on line 28, all right? And then finally 29 is real estate taxes. Only thing go there is real estate taxes, personal property taxes on your equipment, farm taxes, those kind of things go right down. Not income tax, not state income tax. Those don't go there. Just real estate taxes, personal property taxes, and car tags, truck tags for your vehicles, all that stuff. It go right there on the tax line, okay? On line 29. Line 30, utilities. Utilities can include your phones, light, gas, water, all that go right there on line 30. Utilities. Now, these are costs that most of us farmers have. And all of you small growers, large farmers, everybody have utilities. So you see, it's really easy to do a Schedule F when you think about it. Now, I'm hoping I'm making it a little bit easier for you, have given you a little bit more understanding of a Schedule F and why you need to send it in, of why you need to prepare it every year, because it's important for everybody, including yourself. All right, line 31 says veterinarian expenses, breeding, medicine. Sometimes if you're raising animals, you need to have a veterinarian come out and check what's going on. And sometimes we have to have a horticulture to come out and check out regular stuff in our vegetable growing. If we have a strange disease out there on plants, have a strange disease, a problem with our animals, we have to have veterinarians, folks, experts in this area to come out and check it. Well, all those expenses go right there on line 31. All right? And finally, 32, the last item on the sheet. If you have any other expense that's not listed anywhere else on this form, then you write it in. Any other expense that's not listed anywhere else on the form, you write it in. And you give it to your accountant will write it in. If you're not doing your tax return yourself, he'll write it in. But it's going to be kind of difficult to have other expenses that are not listed. Usually they have gone through all the details and all the expenses that you might have are listed. Sometimes you might have some that's not listed but help you produce income, produce your products. Now, these are expenses related to the production of your farm products. Okay? Expenses related to the production of your farm products, expenses are related to your sale of your farm products, all go on line 32. You're not listed anywhere else on the Schedule F. Now remember, you are a part of the Schedule F team now. I expect you to file your Schedule F annually. And if you have any questions, there's always somebody at our office that can help you. There's always somebody in your particular area, your accountant. Just tell them, say, I want to see my Schedule F. And look at it, study it, so you can increase your volume for the next time. All right? Line 33, when you finish all of that, you total all your expenses, and you come up with your total expenses. Then you subtract that on line 34 from your total gross income on line 9, and the net effect is your net income. Sometimes that's a loss, sometimes it's a gain. But whatever it is a reportable transaction. We want to make sure you understand that. It's a reportable transaction. Whatever that is, it needs to be reported, and it's important. I cannot stress that enough, how important it is to fill out your Schedule F. The smaller you are, the simpler it is to fill out. The larger you grow, as you grow in your business, then you might need some help. But right now, if you're small, fill it out. Please. It's important. Everybody needs you to fill out the Schedule F, and it helps everybody. They're working with us, it helps everybody. They're working with USDA. When you go there for loans or grants, you establish that you are a farmer by filling out your Schedule F and filing it every year. Again, Schedule F Troop, F Team, make sure you file it every year. Thank you kindly for listening to me all this time, but I hope you remember, file your Schedule F every year. And a Schedule F is simply a profit and loss statement, a profit and loss from your farming operation. We've gone over all the line items, and we came with your net profit. So just remember, Schedule F. Become a part of the Schedule F team. Thank you.